Square is going public, Netflix earnings kill the vibe, UBERRUSH is going after the POSTMATES market, and more. It's Wednesday, October 14th, and this is Crunch Report. Ho, 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 quite a news day, a little of everything. Let's start with Square. We all expected it, but it is official. Square has officially filed to go public and will list on the New York Stock Exchange. The company reported in its S-1 document that during the first half of 2015, it had revenue of $560.6 million and a loss of $77.6 million. Now, that same period a year ago, revenue was lower at $371.9 million, and losses were higher at $79.4 million. So essentially, the numbers are all moving in the right direction. The company also specifically broke out its transaction revenue from its deal with Starbucks, $62.9 million in revenue in the first half of 2015, up from $56.6 million in the first half of 2014. Square had cash and equivalents of $197.9 million at the end of its second quarter, but an IPO would obviously beef up that capital somewhat. Couple interesting details in the risk factor section of Square's S1. The first being Jack Dorsey. He's the CEO of Square, permanent CEO, and as of last week, also the permanent CEO of Twitter. Square's official wording on this, quote, "This may at times adversely affect his ability to devote time, attention, and effort to Square." Second risk factor, a potential breach of its customer data. It's a payment processor after all, so avoiding that is really, really important. As for company ownership, Jack Dorsey is Square's largest shareholder with 24.4% of the company. Khosla Ventures has a 17.3% stake, and co-founder James McKelvey has a 9.4% stake as well. In a patent suit against Apple, the University of Wisconsin-Madison's licensing branch filed that Apple's A7, A8, and A8X chips, those power the iPhone 5S, the iPhone 6, the new 6S, and some iPad models, contain technology covered by a 1998 patent filed by the Wisconsin Alumni Research Foundation, or WARF. Well, a U.S. jury has sided with WARF, and the presiding district judge, Judge William Conley, has said that Apple could owe up to $682 million in damages. Reuters reports that the case was split into three sections: liability, damages, and willful infringement. The infringement part still has yet to be determined, so potentially the cost of the loss might increase for Apple. Reuters also says that the Research Foundation filed another suit last month claiming that Apple's newest chips, the A9 and the A9X, also violate the patent. It's also worth noting that in 2009, WARF filed a similar lawsuit for the same patent against Intel, which ended up being settled out of court. Ubersoft launched its merchant delivery service UBERRUSH in the New York City market back in April, and today it goes fully live and also adds the service in San Francisco and Chicago. UBERRUSH offers same-day delivery of local products through both Uber drivers and bike couriers, and in some cases, people on foot. And it's hard not to compare it to POSTMATES, really. Both companies now deliver food and various retail items from local businesses, although POSTMATES has also expanded to bigger stores like Apple and has new partnerships with Etsy and Kenneth Cole. Another difference is that Uber integrates UBERRUSH directly into each merchant's checkout process. POSTMATES and other courier services keep orders on their own platform, a single platform. UBERRUSH delivery drivers will get an alert that an order has been placed, go to the pickup location, get the package, and then take it to the address given, a lot like a person. Customers then receive a text alert that the package is on its way or has been delivered, just like passengers get an alert that their Uber driver has arrived. Meanwhile, Uber's been battling New York City Mayor Bill de Blasio, who sought to limit the number of new Uber drivers that could be added in New York City, but Uber eventually won that fight. New data, though, very interesting, released by 538, suggests that in terms of pickups, all Uber is really doing is replacing taxis in Manhattan's most congested areas rather than adding to the number of pickups originating there. So for example, in heavily congested areas of the city, downtown would be one of them, Uber's pickups have increased year over year by 3.82 million, while taxis decreased pickups by around 3.83 million. Total number of pickups, though, including both Uber and taxis, changed by only about 10,000, dropping slightly from 39.37 million in 2014 to 39.36 million in 2015. Interesting math. Yesterday, Twitter announced it was laying off 8% of its workforce under new CEO Jack Dorsey. Today, it's announced a new executive chairman, Omid Kordestani, poaching him from Google, where he'd been chief business officer. Although, when Google made its Alphabet split this past summer, his chief business officer role was eliminated, and then he became an advisor to both Alphabet and Google, but without a specific title. It's not clear whether or not Google will replace him, but he had been with the company since 1999 and was employee number 11. Wow. Last week, Twitter had said that with Dorsey's permanent CEO appointment, it would be seeking a new chairman, which is a role that Dorsey had previously occupied in a non-executive capacity. Earnings week rolls on. Today it's Netflix's Q3, which included revenue of $1.74 billion and earnings per share of 7 cents. Analysts had expected the online video shop to earn 8 cents per share off revenue of $1.75 billion. So it's not a huge miss, although Netflix stock dropped over 10% in after-hours trading after the report. Other numbers, 0.88 million new domestic subscribers, that's in the US, and that's less than the 1.15 million Netflix had set guidance for. The company did add 2.7 million new subscribers abroad. The company ended its third quarter with cash and equivalents, including short-term investments of $2.1 billion. Now on the flip side, the negative operating cash flow during the quarter was $196 million. The company finished Q3 with $2.4 billion in long-term debt. That DVD business, though, $80 million profit. That's up from $78 million in Q2. It's down year over year, though. Netflix says it expects 1.65 million new domestic subscribers in the fourth quarter, and judging by the stock price today, they're gonna need them because investors are not happy with the latest growth outlook. And that is the report for today. I'm Sarah Lane. Thanks for watching, everybody. Crunch Report airs every weekday at 7 p.m. Eastern, 4 p.m. Pacific on TechCrunch.com. You can find us on iTunes, YouTube, and our Facebook page. See you tomorrow.